The following is a presentation of TFNN.
We're going to go to Tom in Colorado, who has been good enough to hold. Tom, thanks for calling. Thanks for holding.
Good morning, Steve.
How are you?
Good. How are you?
I'm doing great. Good to hear your voice.
Yeah, you are Mr. Happy, I'll tell you.
I love it. I love it.
Hey, Steve, I've been listening to the station for over a few years now.
Yes.
And I'm a first-time caller to your show. And I'll tell you, I love the way you break down the charts and explain things, your patience with the callers, the way you articulate the Fibonacci's and what have you. I think you do a great job. You're a great addition to this news network.
Well, thank you very much. We really appreciate that. Really do.
Yeah.
I can change the world. I'll be the sunlight in your universe. You would think my love was really something good. Baby, if I could change the world.
Let's go to a Dave in Boston. Hey, Dave, what's happening?
Hey, real quick, Steve, I got to tell you, man, you saved me yesterday because I had covered my short positions when I saw that mini rally and then they tanked the market, and I didn't know whether to reshort at the close. And then when I got your video update, you totally gave me a game plan, and boy, did it work out.
Oh, that's great.
Kudos.
That's great.
Kudos, man. You were right on that.
Thank you. Thank you.
And even after it came out last night, they reported that they had failed, and then the futures came down.
That's right.
And then they went up again. So,
That's
man,
right.
you were right on that.
Change the world. I would be the sunlight in your universe. You would think my love was really something good. Baby, if I could change the world. Baby, if I could change the world. Baby, if I could change the world.
Let's go to our first caller. Let's go to Susan in Boca Raton. Susan, thanks for calling.
I just have to say one thing. I just recently subscribed to your Mastering Probabilities.
Oh, thank you.
You have put so much time and effort in it, and it shows.
It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the February 12th, wonderful Wednesday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's truly what it's all about. So let's go look at one of our tools. I'm in a little bit of a rhyming mode out here. So let's go take a look at one of our tools. This is the tool I call Zeal. Is the inward fire of the soul that urges you onward toward your goal. You know, each time an opportunity comes your way that allows you to express your talent, welcome the opportunity with open arms. Feel the stirrings of zeal and enthusiasm move within you. Zeal, folks, what a great word. Zeal is the inner fire that stirs us into action. Zeal is the impulse to go forward and the urge behind all things. Here's a great incantation that you can use each morning, each day. It goes like this. Good, better, best. Never let it rest till the good is better and the better best. How about that, folks? Good, better, best. Never let it rest till the good is better and the better best. You know, ask yourself each day, what if? What if I injected more zeal, more enthusiasm in my work or in my communication with others or in my family, my relationships? The list goes on. And if you're ready for zeal, if you're ready for that zeal test, we'll put it to use today. Progress comes from asking one question. That one question, what if? So begin your day by asking, what if? And then add that special ingredient that we call zeal. Let's go check out the zeal in the marketplace right now. Dow futures up 30 points. They're trading out at 15,959. S&P futures up 3.25 points. They're trading at 1816.75. A NASDAQ futures up 10 points. We got to be paying attention to the NASDAQ. It's trading out at 36.23. Russell 2000 futures up. King dollar up 14 ticks right now. In the hard metals, gold is flat, trading out at 12.8980. Silver up 6 pennies, trading out at 20.21. We're going to go see if it's going to be able to break its consolidation pattern. Light sweet crude, it's off to the races, trading out at 101.17, up $1.23 right now. A quick peek around the globe. Let's see what we have going on out here. Over in Europe right now, the DAX is up 79 points, up 0.8%. FTSE up 12 points, up about 0.2. Our call-in number is 877-927-6648. Let's start off by taking a look at the currency markets out here. Right now, we're looking at the euro, U.S. dollar. Of course, this is that weekly chart out here. Yesterday, again, we took a look at it as the euro was moving up. It was running right into the old resistance line, that descending price channel out there, taking it back to that 2008 time frame. Well, now it's traded down into the support level of the shorter-term rising price channel. That's the one that is the blue lines, diagonal lines, if you're watching us on TigerTV. If you're listening on the radio or your mobile device at TFNN.mobi, thank you so much for doing that. Of course, the live stream of the show can be obtained by going to the home page of TFNN.com. Upper right-hand side, you'll see a button, 3 little smartphones on it. Click on that. The show will stream live to you. You'll be taking a look at the rising price channel coming off of the weekend of July 27th out there. That opened 121.50. That's a pretty good anchor point here for that rising price channel. Price right now in the euro trading out at 1.3564, right down to the bottom. Let's take a look here at more of the intraday charts out here. Let's go see what we've got going on inside of the euro, U.S. dollar. We can see wide-ranging bar here. Wide-ranging bar. This is taking place between 6:30 and 7 a.m. this morning. That says, when you see a wide-ranging bar, that it wants lower price. Well, it sliced through the 0.382 retracement. Now, the retracement that I'm looking at is the retracement off of the wide-ranging bar that took place at 9 a.m. on February the 6th. The low there is 138, 134.81 out there. So if you go from that low to the high that was put in, that high coming in at 3:30 yesterday morning, out at 136.82 out there. So if you go from the low to the high, the 0.382 retracement, the normal dead cat bounce area was 1.3605. Like Kerrygold butter with just a warm knife. That's all you need with that nice creamery butter out there. Well, it sliced right through it. What does that mean? It says, hey, you know what? It sliced right through it, and it price right now traveling near the 0.618 retracement level. It actually says the euro is going to go ahead and try and bust that that rising price channel line that we looked at on the weekly chart. Of course, that was a weekly chart, so breaking through it, closing back above it, not a big deal out here. But the euro on the 30-minute chart, it's in that extreme oversold condition. So moving sideways or what have you would be a logical move out here. But it looks like there's going to be some pressure on the euro U.S. dollar. But we got to pay attention really to both of those charts out there. So that's what's going on with regard to that currency pair. I would surmise you're looking at about 1.3524. The 0.786 retracement level would be its next stop on the way down. If we take a look at the Great British Pound, U.S. dollar, let's go take a look at its weekly chart as well. We'll switch back and forth. We'll go to the weekly, then we'll take a look at that intraday chart out here. We know on the weekly chart it has tried now for a couple of months to break through. Well, guess what? It's going to do it again out here. It just does not want to give up on trying to break that long-term resistance line. That's that resistance line that'll take you back into the 2010 time frame, January 22nd, 2010. This is a weekly chart that we're looking at. If it can bust through this is a big consolidation. That'll be a big heads up that we're going to see a huge move inside of the Great British Pound, U.S. dollar. But as we can see here, and its first attempt to really break through this area was December 13th, 2013. So for several months, it's tried to break above that level and cannot. Well, it's going to give it another shot here as we speak right now. Of course, we're only not even halfway through the week, so we got a lot of time left in the session. We'll see if it's going to be knocked back. Of course, if we take a look here at the 30-minute chart, what we can see here, and this is perhaps this takes us back to January 24th. Now, if I pull this back. So January 24th, the red diagonal line, we looked at this yesterday. So this line we put on the chart here yesterday, and what we're trying to do here is identify the price channel. I was only interested in identifying the top portion of it because we were watching price move up into that area. Well, now what we've seen here is we have seen, and if I were going to try to actually draw the actual price channel, it probably would have looked something, maybe like this or so. But I wasn't really concerned with the bottom of the price channel. I was paying attention to the top of the channel line. Now, the channel line, we're not using the extreme emotion, meaning the wick of a candle. We're using the actual bodies of the candle session out here. And when you break a trend line or you break a channel line, what's going to happen is price is going to try to, once it breaks it, it's going to typically come back, test it, and confirm that it's real breakout. Well, in the case of the Great British Pound, if you were trading this currency pair, you certainly want to be able to have the channel lines out here because we can see around 1 o'clock in the afternoon, we saw a test of it, 12 noon yesterday. It breaks, comes back, tests that line out here. We see another break of it again at about 8:30 last night. Comes back for a final test. This took place at 3 o'clock this morning. Now, that is logical because in London, you've got the foreign currency exchanges, everybody coming to work, getting back online. So at 3 o'clock in the morning, during that 30-minute session, we saw a test of the low, and then boom, it took off from there. So it took off from there. Now it's traded out at 164.58. If we take a look at where it's likely to trade to, well, that's up near the 0.786 retracement level. That's at 1.6578 out here. If I were to try to find an A to B equals CD pattern, not really much to go from, meaning if I go from the low that came in at 8 o'clock on February 5th, up to me, my eye would pick out this spot right here, about 2:30 in the morning on December 10th. Not even a 0.382 retracement out there. So not, you like to at least see a dead cat bounce when you're taking a look at retracement levels out here. We can see that if we take a look at the overbought, oversold condition here, in the case overbought, coming into that 6:30 a.m. time frame, it moved into that with a nice wide-ranging bar. Now all it's done is really worked off that overbought condition. Does look like to me we will see the Great British Pound make a run for its highs once again, its highs being the $1.66 level. It all depends on really what happens this week on the weekly chart, but that could be setting up as one heck of a nice trade out there because this is a long-term consolidation weekly pattern, and it has tried for months now to break through there, and that consolidation pattern is absolutely huge. You're going from 165 to about 148. That would be the currency pair that I would be focused on, and I would be looking at just nothing more than long trades on that currency pair. You'd be looking for, now we're not there yet. You have to see a close above this area, preferably now because of it acting as resistance. I would have to say the high of January 24th, and that's at that 1.6, that devilish number out there, 1.6667 out there. So close above that level, and that says that we may, in fact, or the Great British Pound may, in fact, have a real breakout. If we take a look at the other currency pairs out here, you knew it was only a matter of time before we would go take a look at our favorite currency pair, and that is the Euro-Japanese yen. Now let's take a look at that because yesterday we were taking a look at this nice 0.786 Gartley sell pattern. We had a shooting star. Well, heck, folks, coming in at 7 o'clock this morning, we had a wide-ranging bar to the downside. It says we've got a bull trap out there. 877-927-6648. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Futures up 38 points right now. Trade out at 15,967. And caveat emptor. That is the message here from the Euro Japanese yen. You know, yesterday morning when we were on the show here, we were seeing a nice little reversal signal here, this little shooting star. That took place as we were coming on the air at 9 o'clock. That is the opposite of the hammer candle. Shooting star looks just like a hammer, only inverted, and this happens here at highs as the market is moving higher out there. Of course, we had a number of patterns that we're completing inside of the Euro-Japanese yen. During that following 2-hour session as we were going off the segment, Basil was coming on at 11 o'clock in the morning. That level was being manhandled by the bulls out there. However, the high of that shooting star, which is resistance, was never tackled. That was 140.29 out there. We saw price just simply continue to kind of slide sideways here all the way up until the 7 a.m. session, so between 5 and 7 a.m. And that's where the Euro-Japanese yen fell out of bed out here, making that wide-ranging bar down to the 0.382 retracement, 138.73 is the number. And so just now really moving sideways. That says the Euro-Japanese yen, it wants to move lower out here. And if there's some additional conviction behind this move out here, folks, you have to watch out. You have to watch out because the trend is going to change. unless something totally comes unglued out here. So if you were wondering if there were messages of the market that said, caution Will Robinson, this is it. It was one thing to get the shooting star yesterday and then see the battle between the Bulls and the Bears, but that wide-ranging bar that took place out here, that is a huge cautionary sign out there. Now, look, if you get the shooting star, if you get that 140.29 level, because that is a confirmed 0.786 Gartley cell pattern, it's confirmed in big ways out here. If that level gets taken out, 140.29, it will turn into a butterfly pattern. It will turn into a 1.272 or 1.618, and then it will be off to the races inside the markets out here. But it's the currency pairs that rule. We have to be paying attention to them. And this one is as loud a horn as you possibly can get in the markets out here. So I just got to call them the way they are, because that is the way it is out there. That's these patterns. So that's on the euro, Japanese yen. Let's go take a look at the hard currencies. Let's go see what we have going on here in Goldilocks and silver. If we take a look at gold right now, it is totally flat, trading out at $12.89. Of course, here's the weekly chart, a clear break of the a down channel line out here. This is, there can't be a trading desk in the world that isn't paying attention to this, and that is that gold has broken its downtrend, period. Broken the trend, broken the channel. Now, in this case here, what's nice about the channel line is as it was broken, price came back and tested it. It's moved off of it. If we go from the most recent swing point high out here on a weekly chart, which is the August 30th high, down to the low out here in January 3rd. It's a weekly chart that we're looking at on my screen. You can see price now clearly moving above the 0.382 retracement level, which is 1277. That says 1337 is absolutely in the next stop here for Goldilocks out there. I would have to say most likely even beyond that. So that is gold. It's real. It's a real move as we speak here right now. It got above that dead cat bounce level out there, and that says we should see gold get out here, test the swing point high from November the 1st out here on a weekly basis, somewhere between 1305, 1361. I'm thinking 1379 more likely. I think it will overshoot its 100% move of that swing point. That is what the weekly chart for Goldilocks is telling us. Of course, the daily chart, this has a confirmed A to B equals CD up, and it's a doozy because it is only had a 0.382 retracement out there. And what that says to me, it says 1361, the 1 to 1.618 becomes your target zone for Goldilocks out here. That is the daily chart. We take a look at high-ho silver. I know that silver wants to giddy up and go out here. Well, guess what? We're getting some giddy up and go, and that's the weekly chart. That's the trend line now that we're taking a look at on high-ho silver. It is broken through that. As long as we get a close above that today, just like we saw in the case of gold. Now, in gold, we were looking at the price channel. If I were to try to identify the price channel, I'm not going to do that right now on the weekly chart. It's probably lower than where we're at here right now, but that's the weekly chart. So you're seeing it, even though we're in a consolidating pattern. Here's the bullish side. Even though we're in a consolidating pattern on the daily side, let's go take a look at that. The weekly chart here has given us a signal that it's breaking. Now, look. I'm not much of a fan about breaking trend lines and channel lines just simply by moving sideways out here. So silver really does need to get some giddy up and go. But if it does, folks, ooh, what a propellant move it'll be, because it's about $2.50 consolidation range to the upside. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com. Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow trading out at 16,000. That's up 7 points. S&P up 3. Traded 1822. Composite up 11 points. Trading out at 4202. Russell 2000 up 3 points. Leading the charge. The upside. It is trading out at 1132. Apple up $2 in change. Microsoft up 15 cents. Google back $3. Leading the charge to the upside. It is Fossil Group. FOSL is a ticker symbol. Out with numbers after the bell last night. Trading at $5.73. Up about 5%. You had Owens Corning also out with numbers, I believe, up about 12% this morning, up 458. Owens Corning producing $82 million in profit versus a loss of $56 million. So that's a nice move there. Revenue, the top line, $1.28 billion versus $1.16. So they are being rewarded here this morning. TripAdvisor, TRIP is a ticker symbol. They're trading up about 6%, up about $5 this morning, out with numbers as well. $217 million in revenue. That was up 26% from the prior year. Net income of $30 million. versus, 41. So missing the bottom line out here. Nonetheless, doing well. You've got AMCOIL International, AMCOL International, ACO is the ticker symbol. They're trading up a nice, healthy 12% this morning at $4 and change. What's behind that move? Let's see here. Looks like a buyout deal. Yeah, you've got Imerys to acquire Amco for $1.6 billion. So that's what's behind that move. Packaging Corp, PKG, is the ticker symbol. They're up about 7% here this morning. DaVita Healthcare, I haven't seen that name for a while. DVA is the ticker symbol. They're up about 6%, up $3 and change. To the downside, Amazon leading the charge to the downside off $5.50 right now, down about 1.5%. WellCare Health Plans, WCG, is the ticker symbol. They're getting nailed this morning, down about 7% off $4 and change. Google down 230. Fierye, F-E-Y-E, off 4%, down $3 and change. Intuit, I-N-T-U, down 4%. Holy cow. Someone's having a cow here. Not a good kind of a cow. Ventress Biosciences, FTUS. I hope nobody is inside that equity, because if you are now down 62% from the close yesterday. Oh, that one is a tough one to take out here. Other big percentage movers to the downside, you've got Reach Local, RLOC. They produced numbers out here. Let's see, down 15%. They had a widening loss, is what it looks like. $585,000 versus $394,000. And it's thousands of dollars, not that big of a deal. On revenues of $132 million versus $120 out there, but man, they got some problems out there. Increasing revenues and widening losses. Not a good formula for success out there. Back to silver here. You can see silver right now trade out at $20.20. It is going to tackle the top of that consolidation box right around the $20.47, $20.50 area. So we got about 30 cents to go before we can see if silver is going to be able to go ahead and break through the resistance level out here. And if it does, that's about a $2.50 move to the upside. So we'll be paying attention to silver. Light sweet crude, on the other hand, light sweet crude now looks like it's on its way up to the 104 level. It has now cleared the resistance of that swing point at 100.75. That was December 27th. That had, I show volume of about only 65,000 contracts. It's the continuous contract that I'm looking at here right now. So sometimes those volumes, you're at about 68,000 right now. So you've got the 1 to 1 A to B equals CD would take you to 101.83. The high so far 101.28. I do not think that is where price would stop inside of light sweet crude. It should more likely get up to about the 104 level out here. If we take a look at that 30-year Treasury, let's go see what that is doing. That is now breaking through this little rising price channel that it has been in. So it's breaking through that. Of course, the day is not over, but if we do take a look at bonds, we come off of the low out here from December 31st all the way to the high that was put in at significant resistance in the marketplace. That's up at that consolidation level. So it looks like the high from February 3rd is the swing point. You can see so far what it's done. It's made the dead cat bounce to 0.382 retracement level, which is at 132.09. Low so far today, 132.1 out there. Natural gas, let's go see what's going on inside of natural gas. It's up about, just about 7 pennies out here. Had a nice wide-ranging bar yesterday. I show it up on one spot, and which contract? Oh, I've got the March contract out here. This could be forming an A to B equals CD down, quite frankly, because if we take a look, let me just see what kind of retracement we have done thus far out here. Now, it's going to be pretty darn cold across most of the nation out here. That's with the exception of Florida, so you might want to go ahead and get your tickets and come on down here. Weather's been pretty darn nice and only going to get better. The cold front's now coming through here. They're lasting just simply for a few hours, and that's the way that we like to see it this time of the year when you're in February. So natural gas could actually be forming a A to B equals CD to the downside. We'll see how this plays out here. Let's go take a look. How about that? Let's go take a look at some of these stocks here that are moving and grooving in the marketplace. Let's go check out Amazon. Let's go see what it is doing. To the downside, it's leading the charge dollar-wise, down by about $6 out here. Let me see. It should be in one of my core tabs out here. So let's go see what Amazon is doing. AMZN is the ticker symbol. There we go. So Amazon, we know, had some pressure in it. This could easily be forming an A to B equals CD to the downside because we had volume to the downside moving into the level of support. Now, support just simply by a gap up that took place here on October the 25th out here. So Amazon moving down with volume, and the bounce that's in place here has been very light. In fact, if we take a look at what the Amazon has done versus the entire market, you're going to see some pretty substantial weakness. Now, because the market has done more than the 0.382 retracement. In the case of Amazon, that's all that they've been able to do. Now, I'm using the swing point high from the trading session of January 22nd out there, 408.06. So it goes from that high, makes a beeline with some volume, big volume, of course, coming into this equity on January 31st, makes a lower low, 3 trading sessions later. That's February 5th, gets down to a price level of 337.73. That's really not what you wanted to see, was it to make a lower low, because that's your swing point, and it says taking out that swing point with volume now becomes an easier thing to do. Now, if we go from that high down to the low, what we've seen here with regard to a bounce is only a dead cat bounce, a 0.382 retracement, and it has been on lighter volume. The 0.382 retracement number being 364.60. This got up to 365, even Steven. It did that here on February the 10th. If that's all that has got to the upside, the actual A to B equals CD down that this would be setting up would take it down. The 1-to-1 takes you to 294.76, but that would not be where it stops, at least not the way that I would take a look at it. I would have to say 275 to 251 would more likely be the level that it would trade down to. It hasn't done that yet, but only a dead cat bounce. It has not participated whatsoever, really, in the bounce that we have seen inside of the markets out here. So we want to be paying attention to what is going on with amazing Amazon, because it is showing some real chinks in the armor out here. We take a look here. What else we have moving and grooving? Let's take a look at some of these stocks that are just getting nailed out here. Let me switch over to this, and that first one being that bioscience company. Probably everybody that's inside that equity is in a underwater here. VTUS is the ticker symbol. Ventress Biosciences, down with huge volume out here already as we speak. Let's pull this thing back and see if it's trading in any swing points or what. No, it looks like no. Nasty. Very, very nasty. So this thing is at its all-time lows out here. At one point in time, looks like this equity back in May of 2012 had traded up to a high of $13.53. It's now at $1.70. Who knows where this thing is going to stop? And this thing is down with some huge volume today. We've only been trading for, 13 minutes out here, and in 13 minutes it's done 3.9 million shares to the downside out here. So that is a stinger. Let's go take a look at Fire Eye Inc. FEYE is the ticker symbol. They are down about 6.5%. Again, FEYE is the ticker symbol. Down with some, no, not too shabby out here. So they're down about 6%. Is this right? Trading out at 72. No, I don't know that I've got. Yeah, looks like that's about right. So we would say this is the down $5, but not too bad. Volume here so far only about 668,000 shares. So not too shabby. This thing had a nice breakout here back on January 3rd. If volume does pick out, that's probably where this equity will trade back to, either up to the 57.27 or 49.60 level out here. But let me see. They were out with numbers, right? So Fiery, they were out with numbers. Yeah, I think we took a look at them. 57. The revenue is $57 million versus 31, and a loss of $2.5 million versus 12.6. So the pullback here in this one is not too bad. Let's take a look at the Andersons Inc. ANDE. Used to be on the IBD 50 list. Hasn't been there for quite some time, I believe. But let's take a look at it. It is down about 5% here this morning. So let's go see what that is trading into. So gapping down this morning, trying to take on a swing point here, the B point of a potential A to B equals CD down. And that is your low from February 5th out there at 76.05. Now, it did have a nice little sign of strength that took place out here as it was, this is on February 6th out here, the following trading session. But volume right now to the downside is expanding. So you have 108,000 shares moving into the February 5th level. That has 205,000 shares. So this thing here, the trend may have changed on this, and you can see this high volume wide range. Well, it wasn't a wide-ranging bar, but a high-volume bar out here. That is on September 6th, right around 67.15 at the high, 63.68 at the low. A to B equals CD down. That could be setting up on this thing. Let's go see where that would take us to. The 1-to-1 moves 69, but the 1-to-1.272 takes you right into that high-volume bar out here, and that is on Anderson Zinc, ANDE, and it looks like that will be the target if it can bust through the B point out here from February the 5th. Let's go take a look at some things that are moving to the upside. Let's go take a look at Fossil, FOSL. We took a look at that yesterday for one of our Tigers. FOSL is the ticker symbol. Yesterday we said, as we took a look at the weekly chart, that it was problematic. That weekly chart, because of the huge downdraft that this had. This is the daily chart that we're looking at right now. That huge downdraft that began on May the 8th out there with 20 million shares. The resistance line could be the bottom of that May 8th candle. May 7th candle, 125.20. You're at 123.37 here right now. Gapping up, having some decent volume behind the move, 512,000 shares, but folks, you're really benchmarking that 20 million share to the downside move out here, and that is on Fossil, FOSL, and that is the leader to the upside. Just behind them, you've got TripAdvisor's TRIP. They're up 7%, up $6 and change here. They've got some nice volume inside of this equity. Looks like this is taking out some swing points. I don't see any substantial, I do mean truly substantial volume to the downside out here. Let me just kind of clean up the chart a bit. So if we take a look at TripAdvisor, it is now taking on the swing point out here, the swing point from November 15th. The high is 90.43, 2.3 million shares, but you already have more volume than that here today. So TripAdvisor trying to break out. Right now it's traded at 90.04, and it's got 2.7 million shares. So it should have no problem as long as it closes above 90.43. If it does that, where's the A to B equals CD? Let's take a look at the conservative A to B equals CD, and that would take that off of, if we take a look at TripAdvisor here, let's come back just for a moment. Now let's take a look at its most recent breakout. We use a black line across the bottom of the screen. That's the gap here from July 26th. And that gap here, the low of which is 70.46. There was 3 million shares as it was. It 3 million? Hold on. It was more than that. It was 5.4 million shares as it was busting out, as it was breaking out. Now, we had two different tests of that breakout session. The first one was on August 20th, 1.2 million shares, rejected it on both price and volume. We saw another test of that area back here on October the 9th. That was with 2.6 million shares. Again, lighter volume out here. So that's what I would be using as my A point now, just simply for the conservative A to B equals CD. So that's going to be our A. That's 68.11. Our B point, which we already hit, that November 15th area at 90.43. And your C point is this last retracement coming in on February 3rd. You've got a nice move here, nice accelerated move off of the C point. We've got two gaps up off of the C point. TripAdvisor's here is going to make a move, should make a move to about $100.88. The 1-to-1 is 94.82, but it looks to me more like this thing should make a 1 to 1.272 A to B equals CD. Could even make the 108.73, the 1 to 1.618 A to B equals CD pattern out there. So TripAdvisor looking PDG, looking pretty darn good out there. Let's take a look here at Owens Corning. OC is the ticker symbol. That is up nice 14% here this morning. They were out with earnings as well, so this is gapped up with some nice volume. Looks like over at least some recent resistance and swing points. No, it's trading into a swing point from May 22nd, 2013, but doing it also with volume. Dow is up 19, S&P is up 4. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's up 29 right now. S&P is up 5 points. NASDAQ up 17 points. Just back to the Owens Corning stock chart out here. OC is the ticker symbol. Nice wide. This has got a really nice rising price channel out here. Of course, this is just like the market, right? You come back to the 2009 time frame. It's a weekly chart that we are taking a look at. We can see that price has hit the bottom of this price channel several times. Most recently here, just last week, February 7th, got down to a low of 36.80, closed at 38.76. And it is back off to the races. Now it is taking on a swing point from May 24th, and on a weekly chart, doing it with volume. It's got 6.6 million shares is what it's trading into. Through yesterday, about 3.6 million shares to the upside. So it looks like this wants to break out. It's already got a swing point here on the weekly from January 10th. Let's take a look at that A to B equals CD pattern out here. So here's your A point, which is going to be the low of November 8th. Your B point out here is the January 10th session. So it's made the 1-to-1 A to B equals CD. But that wide-ranging bar here, the way it's coming in here, says no, it wants higher price. More likely about $50.61 out here. At 50.61, it probably runs into an expansion of its last set of swing points. Yeah, it does. At really the price level of 48.58. So I'd have to say the target on Owings, Corning. Well, actually, you know what I would do? I say not the 1.272. I think more likely the 1.618 over time is where this thing would like to target. So between 50.64 to 52.43 or so would be its target range. Had a request to go take a look at Apple, so let's go take a look at Apple, see what it is doing here this morning. Apple traded out at 535. 535.25 as we speak, getting up to the top of the gap here. Let's see if it's actually hit it. It has not. The top of the gap here in Apple is the January 27th low. That's where we saw Apple last break down. It broke down with a volume here of 38 million shares. Yesterday was up with 10 million shares. The day before, 12 million shares. I would not say enthusiasm is the name of the game inside of Apple out here. So just getting back into a resistance zone. Has not tested it. That would be 545.75 out there. Inter-session high out here so far inside Apple, 539.56. Volume today, 2 million shares. So volume not too bad in the first 30 minutes of trading. But remember, your benchmark is about 38 million shares to the downside. So right now we got Apple just coming back into a resistance zone out here. Right now you've got net advancing issues inside the New York Stock Exchange at 1234. That is pretty. That's PDG. That's pretty darn good out here. In fact, you've got the New York Stock Exchange leading the, you got the NASDAQ Composite. The Russell 2000 truly is the one that's leading the charge out here. So we'll go take a look at that here momentarily. In fact, let's go over and let's take a look at both. Let's take a look at the New York Stock Exchange first here. See if I can do all this in a minute. New York Stock Exchange right now, having made the retracement of the 0.618 level, maybe this wants to get up to 10.258, another 50 points to the upside here. That would be your 0.786 retracement inside the NYSE out here. If we saw a complete reversal today and you saw net declining issues at 2188, I would tell you without question, just simply get out of Dodge out here. We've got some divergence, folks, and it's divergence worth paying attention to, and that is the Euro-Japanese yen. It's headed in the opposite direction of the U.S. stock markets. That has never led to anything good over the last several years out there. That is the carry trade. And guess what? It's saying it wants to carry us lower. Folks, have a great Wednesday. Be safe out there. I look forward to speaking to you soon. Have a great day, folks. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land. Host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.